not. I think the recovery is as expected, and I think we expect that to continue into the second half. I think the theme that we should take from this positive PMI is that although the recovery is on track, there's widening divergence. There's widening divergence within China and the rest of the world. As you can see, that services continue to do better than manufacturing, although manufacturing is picking up. There's widening divergence within sectors such as export-oriented or domestic, widening divergence between the size of the firms. You can see the smaller firms are not doing as well. And the second implication we want to take from this is, although we have a recovery, it doesn't mean that we're going to have a very smooth recovery into the second half. As you can see, that the underlying of this shows that firms, in order to protect profitability, have shed employment. So the employment contraction for manufacturing worsened, and that has a lot to do with the external market. New export orders are still falling, although falling by less, and that in itself is going to put pressure on very externally linked companies. And even in the service sector, that's bouncing quite strongly relative to manufacturing, the employment aspect is also still worrying. So overall, you can see that the divergence is also on the supply versus the demand side of growth. It's much easier for China to support the supply side of the economy relative to demand, particularly when you have an employment situation that's weakening.
How much of this is real demand, do you think, versus, of course, government stimulus helping out?
Well, I think so far you can see that the stimulus has been, we have a very targeted support for monetary, and on the fiscal side, you see a huge widening of the quota for local government bond issuance to 3.7 trillion yuan, and that's much higher than 2019. So you can see that the state-led sectors are likely to do better because they're just giving more scope to do so to offset for the private sector, because the private sector is responding to the demand side of things, and they're shedding employment, they're reducing inventory, and they're going to have a decline, but likely to rebound better. However, on the government side, you're likely to see more of a push towards infrastructure. Infrastructure-related sectors will do rather well, and you are seeing that in the data. So remember that this is a soft survey. It surveys manufacturer, how things are doing relative to the previous month. Every month we get hard data, and the hard data is showing this divergence in performance where IP is rebounding, it's going towards the positive territory, and retail sales are improving, but they're still contracting. And so that, again, shows that we're having some stars outshining the rest in terms of this recovery, and it's rather uneven. Even as an aggregate, we're marching away from the lows that we had in February and March and grinding higher as we head to the second half.